Companies and high inflation. We live in high inflation times. Retail price inflation is approaching 10%, which is something that we haven't seen since the 70s, I don't think. And actually some of the producer price inflation is even higher than that. So in this video I just want to have a little look at what you can do if you are in a company. I do regular updates on tax and accounting issues, so if you'd like to be kept up to date, please subscribe to the channel. If you press the like button, it really helps me and the channel. So inflation is a given. Inflation is, this is being recorded in May 2022, and inflation is particularly high. There is a possibility that it'll tail off a bit since I think the fuel prices in particular have, at least they are maintaining at high levels, but they seem to have stopped increasing at quite the rate they were increasing earlier on in the year. So hopefully it will come down. But inflation does give businesses particular problems. And I think that the first thing that I always think about is it's very easy not to increase your price, because we don't like, as business owners, we don't like increasing our prices because we worry that our customers will go somewhere else. We just like to keep our prices the same, but it is really important to keep your prices up to date. If your costs are increasing, then it's only fair that that you're paid a reasonable amount for your labour. And I think that if you have confidence in your business, then having confidence to increase your prices. And I think it's very important not to get behind with that, because if you're doing regular price increases, those price increases can be small, whereas if you leave it for a few years, then the inflation over the last few years has been sort of like 15%, and increasing prices by 15% is a lot to ask your customers to bear. But inflation is more complicated than that. I think one of the things that we should all be aware of is that there is a lot of inflation in wage prices. Both the minimum wage has been hiked up, but actually wages out there are increasing quite rapidly. And it's important, therefore, not to get behind the curve with your staff, because don't forget that if inflation is 8.5% or even higher, these high percentages, it means that if you're not giving those sorts of pay rises to your staff, you're giving them a pay cut. And I think that's it's a little bit rude, and you need to consider whether that's actually the message you want to be giving your staff. And it is the case that if you're not putting your prices up, then you can't give your staff a pay rise. So effectively, by not increasing your prices, you're sort of telling the world that your staff don't deserve the pay that they used to have. And I sort of think that equation isn't quite fair on anybody, actually, because not least because the ultimate end to that is that your staff leave and that your customers don't get the service that they expect and should get. But also inflation does more things like it creates shortages, because sometimes prices don't increase enough, and that creates shortages. So if you've got essential parts to your business, it is important to maybe keep a little bit of stock, because more stock than you did, because it does tend to lead to shortages if you've got critical inputs. And aligned to that, if you only replace stock periodically, it is important to increase your prices to the replacement stock value, not just the current what you bought it for originally, so that your prices reflect the costs of the raw materials as they are now, not as they were when you bought those raw materials. I think there are a few other little bits and pieces, so you've got to make sure that you keep within the VAT threshold. If you're under the VAT threshold, that can be important to some micro businesses. I think it's important to continue to pay yourself, so the margins. So if your costs increase by £1 per unit, and you increase your prices by £1 per unit, actually what's happening is your margins are, as a percentage, are actually declining. So it's important to maintain your margins, and the devil can be in the detail of the numbers. So that can be something that's quite difficult to think through, but it will be, it becomes obvious if you don't increase your pay, what you take out, in line with inflation. So I think it's important to keep your pay up in line with inflation, because that is the proof that the business is still making the same amount of money in real terms. And I think that the last thing on inflation I just want to touch on is that inflation tends to give you a bit of instability, because because governments do weird stuff, and they might ratchet up interest rates, and that could create a bit of an economic crash and recession. They could continue to print money and continue to stoke inflation. Who knows? But I think all of that just creates a certain amount of instability, boom and bust, all of that sort of thing. So whilst in inflationary times you don't want to have huge cash balances, because it's sort of a melting iceberg, because the money is becoming less valuable, at the same time you do need reserves, because it creates instability, and what you want to make sure, of course, that you have the reserves, a bit of wool on your back, so that if there are hard times, you can cope with those. So that's my bit on inflation for businesses. If you find it interesting, then please subscribe to the channel and press the like button, because it really helps me and the channel. Thank you.